Recent data reveals that while the banking industry in the U.S. is facing significant challenges, executives are mentioning credit tightening more frequently in earnings calls than during the 2008 financial crisis. Additionally, Google Trends data indicates a surge in search queries related to bank failures and crises. The findings suggest that the U.S. economy is experiencing a period of instability and uncertainty, prompting concerns among market observers. The U.S. economy is struggling with a trifecta of challenges: soaring inflation, steep interest rates, and a banking industry in disarray. Since Silvergate Bank's announcement on March 8,
with them about whether any of them or some combination of them might like to acquire it. The other is the FDIC will take it over and turn it into a FDIC-run bank for at least a while, and then figure out after that where they go with it.
What happens now? Does the government, do they systemically say that this is a systemically important bank, and then they can go in and potentially make those depositors whole? But we do know politically that might be difficult.
They could do that. I don't think it's necessary. This bank is a bank that the FDIC ought to be able to take over and handle well. And there are ways that they can deal with depositors. We did some of those things in the 1980s. For example, it's possible that they could take care of the large depositors in a way that we did in the 80s, which would be to do a partial payoff of those depositors up front and then more later. So I think they have a lot of tools they can use. And I think what you want to do in a bank failure is not have it be too disruptive. And I think they need to be mindful of that, taking care of the uninsured depositors for sure, taking care of the insured depositors for sure, and then the uninsured, taking care of them as best you can without causing a lot of disruption, and taking care of businesses that don't want to lose their business accounts. So there's things that I've been writing about, some things that we need to do to improve the deposit insurance system and the way it operates. But a lot of these things the FDIC can actually do without new legislation.
Well, we've had a bit of a collision of headlines today, Bill, because this news hits the same day that the Fed is out with its report on the collapse of SVB. And there have been a lot of questions about what the response should include more broadly from Washington. Can you speak to our viewers, though, about the differences in these cases? Because it's pretty tough to connect the dots between SVB and First Republic. Is this something that calls for a broad approach or a precise one with each bank?
Well, each bank is different, and you have different issues that you have to deal with depending on what's in the bank, what depositors are in, and how many uninsured there are, and how many business accounts there are. There's a lot of things that you have to consider because you do not want the failure to be really disruptive in the local communities. And so I don't think there's a one size fits all, but I do think the FDIC has a lot of discretion and ability to shape different transactions in different ways. And another important part is who would like to buy this bank, if anyone. And so I think there's a lot. It's hard to say that there's a standard way to handle a bank failure. I think when I was at the FDIC, we handled thousands of banks and S&Ls that failed, and a lot of them followed the same format, but a lot of them didn't. A lot of them had to be specially tailored for the things that were important in that transaction to the public.
Given you were in this position before, can you maybe give us some insight and walk us through what's happening right now, given the fact that we know that we are waiting for this major announcement from the FDIC?
I don't know what's happening right now. I know that there's been a lot of negotiation going on among the banks that are considering how they might be helpful, and the FDIC. And I'm sure that a lot of those discussions involve people from the bank itself. But if they're not doing a takeover deal, if the FDIC is instead going to take over the bank put it in a bridge bank temporarily, at least. The FDIC is very busy right now trying to figure out how to get that all done. They don't have a lot of time. They need to get it done over a weekend. And the FDIC probably has a lot of people in there right now, I would guess.
Yeah. Bill, you mentioned deposit insurance. Can we put a finer point on that? Because that was a big point of debate a couple of weeks ago following the collapse of SVB and then Signature. There were lawmakers who thought the $250,000 threshold should be increased. It's starting to look like nothing is going to change, should it?
Well, things will change. There hadn't been time for any changes yet. I don't believe the $250,000 limit needs to be increased. The purpose of deposit insurance was to take care of smaller depositors who didn't have the sophistication and the time and the knowledge to protect themselves. I think we can expect that larger depositors don't need to be protected to that extent, to have all of their deposits covered. I do think they ought to be at risk to some degree, so we have some depositor discipline, some marketplace discipline in these banks when they take in these big investors. I believe the deposit insurance system does need to be reformed. It's been a long time since it's had a significant reform. I do believe that business accounts, checking accounts, for example, that don't pay interest, need to be protected. I would protect them all the way because they're not chasing rates. They're not causing trouble. They are business accounts. They're meeting payrolls and doing all sorts of things that are important to the local economy and the overall economy. So I would protect those fully. I believe that the $250,000 limit is just fine for the smaller depositors. I think that the larger depositors, we need to have a plan where they get most of their money right away. And the FDIC, it will be given to them by the Fed. The FDIC will repay the Fed. And the FDIC will collect the assets of the failed bank and repay the Fed with that money. And if there's any excess money over that, that can be given to the larger depositors that took a slight haircut on what they were getting. So things like that are what need to be done. And the FDIC, I think, needs to be a more independent agency than it is now. When I was chairman, it was very independent. The Fed was very independent. And we've gone away from that. I think that gets politics way too involved in bank failures. And we need to have more independence in these agencies so they can do what needs to be done without regard to who's